Akshay, Bhagwat also joining in this morning of JM Financial Services. Akshay, very good morning to you. Are you looking at a Nifty at 24,000 in the short term? Are you seeing that much of power, firing the markets? Or would it be too soon to say?
Good morning to all. Well, yes, there is absolute fire in the market, and this upside move has caught many by surprise, especially if you are an option writer or you're short in the future segment. You're on the wrong side of the market because it's the monthly expiry which is just in the next couple of days. There is no indication as yet on the technical setup where you can see a kind of a stopover in the Nifty index, and really it is more of the short covering rally which is driven by the covering up of call writing positions, which is driving up the index. Now clearly the call writers in the futures and options segment are shifting their writing bets to strikes of 24,000, 24,300 and higher. So there is kind of a stance where the call writers are severely stuck, and in all probabilities there is a very good chance that the market may aim for levels of 24,000 in the next couple of trading sessions itself. So yes, 24,000 landmark can be achieved within this expiry itself.
Expiry, that's important. So, I mean, if you're sitting with shorts, of course, you have to cover up quickly. That's probably what's driving up the markets. But if you want to build fresh positions, Akshay, that question to you, what would you advise?
Really, from a fresh buying perspective, I think we should give a look at how the rollover numbers comes out in the futures and options, because the recovery is too fast and too furious, and really you have a lot of factors like an NAV propping or tax harvesting, which are all the factors which come into play in the second half of March. So really you have to take this move in part and parcels at this point of time. Clearly, risk reward payoff doesn't suit well for a trader, and really you have to wait it out and patiently wait for a small dip for things to settle down before building up fresh trading buys.
Very quickly, Akshay, your top picks this morning.
Well, I have ITC on the buy side. Most of the stocks have moved up. So really, FMCG has not done yet its share of up move. So I think ITC should see 418 and 422 in the short term scenario. Stop loss will be 402. And the second trade is in financial services, Power Finance Corporation. The target area I look forward to is 445 and 453. These are the two targets with a stop loss of 407.
Okay. All right, so PFC as well as ITC on his list. But let's talk about the big brokerage call of the day. And we've got Axis Capital that has initiated a buy on Karur Vysya Bank with a target price of 295. Another financial name that is in focus today. Harsh joining in to tell you what they're saying and why this is a conviction buy. Harsh?
Yeah, good morning. 41% upside from here is what they're seeing on this one. I'll break it up. First off, with regard to margins, they believe that Karur Vysya has a phenomenal deposit franchise, a quote unquote formidable deposit franchise versus peers, and therefore raising funds is at a lower cost is not a challenge with regard to where this bank is concerned. Plus a reduction of turnaround time with regard to loan disbursals, as well as trying to with digital, trying to push loans out in a more efficient fashion are going to aid the margin numbers as well going forward. There's been a big shift from corporate towards agri and MSME. All of these levers should help margins going forward. Risk-based pricing across loan segments should overall help the margin profile. Second, with regard to asset quality, what's helping it is the shift away from corporate. Loan origination has become better and the recovery processes have become better according to Axis Securities. OPEX ratios will continue to remain elevated according to them. Higher employee expenses, retirement provisions, as well as higher tech spends will keep pressure with regard to where OPEX is concerned. But otherwise, overall, ROA delivery expected at 1.6% and ROE at 17% FY27 is what they're penciling in, giving it a 1.6 times price to book. Risks, of course, being delayed in cost improvement ratios or improvement in cost ratios, and a higher than expected slippage or credit cost could well impact the expectations around the target price. But outside of that, a very solid 41% upside.
A 41% upside coming in on a Karur Vaishya Bank. From Axis Capital, the stock ended with gains of nearly 2% in yesterday's session as well. But moving on, you have the consumption pack that has been in focus, not doing pretty well right now in terms of the sector as a whole. And from what we are picking up is that the FMCG distributors inventory, that is what is piling up, and this is mainly because of the faltering that's happened in the February sales numbers after that marginal uptick that we saw in January. My colleague Sesha Sen has more details on this. Sesha, if you could help us understand what has happened overall in terms of the inventory pile-up and which are the companies that you see that could be getting impacted.
The distributors of fast-moving consumer good companies have been piling up inventory as companies aggressively push products into channels to show volume growth. Now, after a lackluster festival season, there was a slight uptick in demand in January, but again, February and March so far have lagged, causing a build-up in stocks. Now, what we are given to understand is that the average closing stock at distributor levels has gone up by 25 to 40 days versus a lag of 7 to 10 days in the last few quarters. Distributors of companies including Colgate, Dabur and Britannia have missed their sales target for February as demand in urban markets remains under pressure. Meanwhile, the FMCG companies have been focusing more on quick commerce, standalone modern stores as well as rural markets for growth. Now, unlike in the traditional general trade, there is in fact a surge in discounts in modern trade such as the supermarkets, and companies are pushing for bundled offers in small packs to grow volumes. Now, but that hasn't really been effective because the muted demand scenario would mean another stressful quarter for FMCG companies, with analysts predicting a single-digit volume growth for FMCG players in the March quarter. Rising input costs such as those of palm oil and coffee are also eating into margins. While companies have taken price hikes, it may not really be enough to cushion margins in a subdued demand environment.
Okay, important story there from our colleague Sesha, who has done the ground checks to back it up. And I want to just pull up some of the stocks that she's talking about and look at how they're doing in the pre-open session and how they fared in the pre-open session. Your pre-open has ended now. Nestle, Colgate, just Britannia, just let's look at a few of them and see how they're performing. Colgate actually under pressure this morning. I think so is Nestle as well. What is the play? Sunny, let me come to you on this. Is there any, when you're expecting an economic recovery, is FMCG something that is going to be left behind? Because logically, you would think that you would see a better inventory build up here. But from what we're learning, maybe Q4 is going to be a bit painful as well.
Yeah, FMCG, I think will be kind of mixed bag. So we all know that GT, which is a general trade, has been going through a rough patch because of the emergence of new distribution channel like quick commerce, and most of the FMCG companies have alluded to this the same during this during the earnings call also. But what I feel is that most of the negatives are already in the price, and in fact, if you look at the palm oil prices, they have corrected significantly during the last one quarter. So we continue to remain selectively bullish within FMCG names such as Godrej Consumer, which is one of the largest, second largest player as far as the soap business is concerned in India. At the same time, companies like Imami, where we have seen a very robust December quarter, and we are expecting the performance to continue during the March quarter also, trading at a reasonable valuation of 25 times price to earning multiple. So Imami is another pick. Tata Consumer going through some trouble in terms of higher tea prices, but again, I feel it's a good time where one can look at names like Tata Consumer and ITC also.
Akshay, earlier on we were speaking to Amar as well, and actually isn't your pick ITC? So I'm wondering whether you see any opportunities in the wider consumption space, considering that this is not really a pocket that has participated as much. You mentioned that, but beyond ITC, do you see any opportunities?
Well, from a technical standpoint, it's more of banking and financial story. And somewhere, if I were to look at even the positioning in derivatives, there has not been any major additions on the buy side in the consumer durables pack. So really, when we talk about names like an HUL or an ITC, which might do well, they would do the job of supporting the Nifty index from here on, where they would lead in parts and parcels. But really, sector per se, if I were to take a view, still there is no long additions or a kind of a momentum pickup scenario which I see in the FMCG space. So I think it's more sensible to chase names which have strength, chase the banking and financial names. There's where the strength is if you are keen on capturing the momentum of the trading side of the market.
Right, so that's with regards to where the FMCG players are concerned. Now, two other sectors that remain in focus is auto as well as pharma, and this is with regards to the tariffs that could be coming in from the 2nd of April. Now, the dates are not confirmed. However, there will be imposition, that is what is confirmed. Sunny, let's look at auto. Now, within auto as well, mainly if you have to look at companies which are on the ancillary space, how would you look at it? A quick one, what would you avoid?
Yeah, so I mean, the tariff definitely, auto is a sector which is likely to get impacted because of this tariff, and let's see how this play out. Whether so, you need to look from both the angle. One is the companies which are supplying to US markets, and then companies which are supplying to European markets, and the tariff across between US, India, as well as US, Europe. So ultimately, slight confusion over there. But again, as of now, I would like to remain focused on the domestic focus auto ancillary companies.
Right. Okay, domestic companies is what your focus is, and that makes sense till we're clear on what happens to tariff, what happens to the EPA. But nevertheless, the focus is all on India this morning. Do you hold up? 23,800 is the next focus on the Nifty. We're not far, to be honest, but we have to see if we hold up, as seems to be the case. IT sector showing a bit of a comeback today. More IT than banks this morning. 1% up on the Nifty IT. Remember, they've been sitting it out and not really participating in the fast and furious recovery as was described by our guest this morning. Fast and furious it surely is. Even on the broader end of the spectrum, 0.5% up on the mid cap 150, not half bad at all. The small cap 250 also 0.75% up in the green. So a good opening this morning. Bank Nifty also 0.5% up, not showing the same boom as the Nifty IT, but then remember the Bank Nifty is what has been firing overall. Let me pull up the Nifty heat map for you just to show you what is on top right now this morning, as you're seeing another interesting morning coming in. Ultratech ruling the roost, about 2% up. Look at the entire top row. It's all about IT. Remember, you see the sector rotation happening right now as the market is trying to find its feet once again after nearly 6 months of drudgery, and it's the turn of the IT companies. HCL Tech, Infosys, TCS, all of them, Wipro, all of them coming into flavor. HDFC Bank continues to be the favorite. Axis as well. I wonder if Kotak Mahindra Bank is participating this morning. Perhaps not as much, but a fair division of green and red, not too much to complain. Dr. Reddy is only one to mark out. Maybe some of the pharma companies. Remember, Trump now says auto tariffs coming again, and then pharma is next. It's all vague, but we don't know where those darts are going to hit. So maybe that's why about 2% down on Dr. Reddy's. We have done a story today talking about inventory levels building up. Nestle and Britannia in the FMCG space. Nestle and Britannia feeling the heat in this, not participating in the bank rally at all for obvious reasons. So that is understood. But broadly, this is the picture. RIL under a bit of pressure, which was secondary tariffs on anyone importing from Venezuela is what the US president has said. Some impact on RIL was expected to be seen, and if you had a heavyweight like that participating, perhaps you would have seen more strength on the Nifty now, about just 80 points up in the green. But the broader markets is where all the action is, Alex.
And right on top of the screen, you pointed out Ultratech and part of the cement pack, and we'll talk about a few more names as well. But I do want to pull up the sectoral indices just to see what the texture of the market is like this morning. IT right on the top of the screen, gaining as much as 1% or thereabouts. gained this much, but the rest of the market gained much more yesterday. So it is leading the pack today. Realty as a pack doing reasonably well. Defense continues to be buzzing. And this is really, a lot of these stocks have gained very handsomely over the course of the last month. Our technical analyst earlier today, Amar, saying that you should perhaps consider booking if you have significant gains over the last month or so. You have media that's doing reasonably well. Energy is up and about 0.5%. What's languishing? And you have pharma, but not declines that are egregious at this point, down about 0.4%. All right, let's talk about individual stocks. And there are several brokerage notes that have come through, which we're going to focus on the impact of at the start. And the likes of Ambuja Cements, we pulled this up because this has been upgraded to a buy by UBS. And Ultratech was also mentioned. The stock is up and about, and you will see stocks in the cement packs perhaps reacting to this. So the mood is changing in that pack. Things are looking up for them. Bandhan Bank, strong, high conviction buy from CLSA. It sees a 49% upside at this point. The stock is up about 1.5%. More brokerage calls. Suzlon, there is a Motilal Oswal initiation with a buy rating. Target is 70 rupees, which is a considerable upside from this point as well. It's not a level that the stock has not seen. The stock is up about 2% in trade today. Again, what they're saying is that all of the factors that we've been talking about with regard to Suzlon, the participation in the renewable story going up to 27 as well as 2030 is looking good for the stock. Karur Vysya Bank, another buy call. This one is also an initiation of a coverage. Axis Cap saying that the potential upside is quite considerable, as much as 41%. Let's talk about a couple more. Brigade Enterprises, and it has acquired 4.4 acres of land in Bengaluru. The stock is up and about, gaining as much as 3.5%. Remember, this is a stock that is part of the pack that has bounced back in trade today. Central Bank of India announcing a QIP. It was at a discount to yesterday's closing price, so the stock is under a tad bit of pressure right now. 1,500 crore rupees to be raised in this latest issue. Not a very large amount, and also the capital adequacy standing at over 16. So it's not like the bank desperately needs funds. The pricing of that issue is what you should focus on. RVNL has got another order to the extent of 116 crore, smaller than the recent orders that it has got, but it's still a positive, and this stock has now gained over 11% over the course of the last 5 days or so. And finally, the pack of PFC, REC and IREDA. All of them are gaining in trade today, but the development was slightly negative because the priority sector lending norms have been tweaked a little bit, allowing for more lending in the renewable energy space. If banks lend more there, then it eats up into the pie of PFC, REC and REDA. The street not taking it badly at this juncture though. So all told, a lot of interesting names, Tamanna, and more stocks gaining than not. Hiral, what else are you looking at from the broader markets?
One more stock, Alex, that is in focus is a SG FinServe. That stock rallied in yesterday's session as well. Today it's up almost 16%, and this is on the back of Madhusudan Kela, who's got ahead and bought around 1.7% in the company. So that's a strong stock company that we've been watching out for. If you see the 5-day chart as well, strong moves there. Apart from Ultratech, we've spoken about Dalmia and Ambuja, which are on an uptrend. OMCs have been under pressure, so you have the likes of a Chennai Petro, HPCL, BPCL, all of them that have been down and about in trade. And this is probably on the back of Trump's tariff impact that you're seeing this kind of a downtick that's coming in with regards to where OMCs go. In terms of other broader market stocks, Salasar Technologies, second consecutive session of an uptrend on that one, 14 to 15% is the kind of gains that you're seeing today as well. Ethos is seeing a good run. Zen Technologies, that continues the uptrend as well. So with the Zen, let's pull up a Garden Reach Shipbuilders or MTAR, because the defense companies are the ones which have been picking up steam as well. In fact, we will be taking this conversation further as well as to what's the next leg on that aspect. But these are a few of the other names which are seeing some smart moves. In fact, Akshay, let me come to you with regards to one of the stocks which is seeing strong moves, SG FinServe. What are charts indicating on this counter? Two consecutive session of gains that have come in. Do you see further buying interest, or would you say this is the time to book profits as per the charts?
Well, if you look at the kind of volumes which have picked up in this counter today, that's a very strong signs of a possible bottoming out scenario around the levels of 320 to 325. So, if you are considering the stock from a buy and hold with a positional outlook of a 10 to 15-day holding, then it makes sense to take a fresh buy trade. Overall, the charts are suggesting that this is heading for the immediate resistance zone of 380. Might take some time to break the resistance, but the way the setup is, the way the volumes are picking up, in all good probability, the stock should make an attempt to get past 400 and possibly move for targets of 415 to 420.
Okay. I want to look at JBM Auto. If we can pull up the last 5 days or last 1 week, because this is a stock that I was wondering about yesterday. It gained over 10% and it's up about 30% for the week, but it's down about 2%. I'm just wondering, Akshay, profit taking seemingly kicking in, and if you managed to buy this stock, would you take money off the table right now?
Yes, if it is intraday or very short term with a couple of days perspective. If I were to look from a slightly medium term perspective, months holding, then the stock has recovered from its key technical support zone of 565.70. So that holds a lot of promise from the stock from a positional or a buy and hold perspective. Overall, I am looking at targets of around 750, 755. So this is more of a buy and hold kind of a strategy which you need to adopt. If you have an intraday view, then really it's going to be a bit choppy considering the fast move which it has witnessed. And so I would suggest better to wait. You will reap the benefits of this patience where the stock rewards you for targets of 750 plus.
Okay, we talked about how IT is in focus. Akshay, is there anything that you would nibble over here in terms of IT companies as well?
IT definitely is the sector which you should look forward to from a short-term trading perspective. A couple of names which are noting long additions in the April series and which have strong technical setups where you can kind of buy and hold. One is Persistent Technologies here. This stock is signaling a possible bottoming out formation around the levels of 5200. There's a small resistance zone around 5500, and I'm looking forward for targets of around 5700 to 5800. So Persistent Technologies is one stock you can look forward to. The other stock which you can look forward to is OFSS, Oracle Financial Services. Here the stock is setting up a base around the levels of 7400, and in all probabilities 8800 to 9000 should be the targets you can look forward to.
Stop loss for both, for Persistent and Oracle?
So for Oracle, the stop loss would be 7400 on the long position which I recommended. And if you are buying Persistent Systems, then your stop loss should be at 5275.
5275. All right. Stay on with us as we get you details on what exactly is happening with Colgate. I just want to pull up the Colgate chart this morning where we're seeing quite a bit of pain point. I don't know if you can pull up the intraday as well for the last few minutes of trade, about 10 minutes of trade that we have seen. So you're seeing that sharp drop. Now here's what's happened. There's been a call with select analysts where Colgate management has indicated that a muted growth environment with high base as well as weaker demand has led to a slowdown in sales in February. Remember, this is echoing a report we showed you just a short while ago from our colleague Sesha Sen. Somit joining in with more details of that particular call with Colgate specifically. Somit, what are we hearing?
Yes, Colgate will remain in focus given that it's one of the top F&O losers, and Colgate actually did a call with select few analysts, and what we are picking up from the key takeaways that are coming up from that call is firstly, the management has clearly highlighted or indicated that Q4 numbers are expected to be muted, and this is because of high base and weaker demand which has led to this muted growth environment for Colgate in the fourth quarter of FY25. Along with this, they're also saying that there will be profitability pressures in the fourth quarter owing to higher promotions and higher discounting, which has been a trend for Colgate at least for the last couple of quarters. So that has remained in the fourth quarter as well, and that will lead to lower profitability. So both these factors, lower revenue and higher discounting, both these factors will also put pressure on the company's operating leverage, and the margins are expected to be in fact weaker on a YOY basis. Now they're also saying that they had taken some price hikes. However, the impact of this price hikes will not fully reflect in the fourth quarter given the fact that discountings were higher. So price hike will not mitigate the impact fully of the higher discounting that the company has been doing so far. However, they have also said that they are likely to outperform the overall industry growth in the fourth quarter. Now, analysts were expecting Colgate to report a revenue growth of around 1.5% and EBITDA and PAT growth of around 9%. But given this new indication that the management has given, analysts believe that there could be target price cut or EPS cuts of at least 3% post this new update that has come in from Colgate, and that's the reason we are seeing this kind of a downtick when it comes to Colgate share prices.
That's a quick update, Swami. Thank you for that. You're seeing that a reaction come in almost instantly on a Colgate. I want to see what Nestle, ITC, Britannia is doing as well, and we mark this as we open the markets as well, that FMCG might be a pain point over there. In the interim, do note how markets have come off. Akshay, some selling pressure there coming in, FMCG under pressure as well. Anything that you would see as an opportunity as in FMCG, or you'd stay away? Any short positions over here? What would you do with FMCG as a pack? Akshay, Bhagwat, that question for you.
Yeah. So FMCG, I will look for selective pockets. HUL and Colgate are my top picks here. Colgate, Nestle, these overall have a weak setup. So I have to be very specific when you select FMCG names because the momentum is not in these counters. So ITC, which I recommended on your show, continues to be a buy for me. HUL also I feel should recover well. Avoid Colgate and Nestle as of now.
You're saying is a top pick or an avoid? Because I thought I heard you saying it's a top pick.
Yeah, so it's a top pick. ITC continues to be my top pick. You can consider buying it. Overall, I believe 420 plus.
What about Colgate? What about Colgate?
Colgate should see continuing selling pressure. It has a weak technical setup. It has not performed well in the recent recovery of the market as well. Looking at targets of 2100 on the downside.
Stop loss on Colgate, Akshay?
If you are shorting Colgate, then your stop loss should be 2400 plus.
Okay, so 2400 plus on a short call coming in on a Colgate from Akshay. But moving on, as we know, Trump has issued an executive order declaring that any country buying oil or gas from Venezuela will pay a 25% tariff on trades. Now, the announcements would have an impact on the oil prices because if you see in terms of oil, currently we're trading at around $74 per barrel. Mika joins us with how this announcement will actually impact Indian companies. Mika, over to you.
So India is at a risk for getting those 25% tariffs imposed, and that's just because of 1% of our crude import bill. The major announcement is Trump stating that he would leave at 25% tariff on any country buying oil and gas from Venezuela, and India is one of them. Now, as per Ministry of Commerce data, in 2023-2024, we imported $800 million worth of Venezuela crude, and this was a part. This accounted for 0.58% of our total crude import bill. In the April 2024 to December 2024 period, which is the latest data available, that is at $1 billion of crude from Venezuela, and this marks a 27% uptick. And in terms of the amount of barrels that we've bought in the April 2024 to December 2024 period, we've imported 15.5 million barrels of oil. This pertains of 1% of our total crude oil imports, and this is an increase from the 2023-2024 period where Venezuela oil accounted for 0.74% of our total crude imports in terms of barrels. Lastly, in terms of stock specific impact, well, Reliance Jio is in focus because as per multiple analysts, Reliance is the only Indian company currently importing Venezuela oil. It had secured an official clearance from the US authorities to get it from the South American country, but the clearance was given in July of 24, and this was well before Trump administration did come into office. The exact amount is unknown, but yeah, there would be a negative impact on this company.
All right, so thanks for that update, Mika, and clearly you're seeing some implications of that play out right now. But The stock that I want to focus on, in fact, actually, let's pull up the intraday chart for the Nifty 50 because this will just give you a perspective of the fact that it's quite choppy today. It's not a very large range, but we bounced from the low point of the day. We gave up some of those gains. We're back where we started, more or less, with gains of about 1/3% for the Nifty 50. The worst performer on the benchmark, though, is Dr. Reddy's Laboratories, which is down about 2.5%. In fact, that entire pharma pack is losing ground, perhaps on the back of the expectation of tariffs. There was an announcement or a statement that was made by US President Donald Trump saying that there could be tariffs in the offing, of course, for the auto sector, but pharma is not too far away, is what he said overnight. Auto pharma losing ground, Dr. Reddy's Laboratories, Ipca, Granules, all down in trade today. But Sunny, the question really is that would you wait for the dust to settle? Because we've been speaking about this over the last several weeks. It's not easy. As you've seen, there was an announcement by Hyundai to set up capacity on steel there, set up manufacturing capacity in the automotive space, but you can't switch capacity in pharma very easily. So the expectation was that they would be more or less insulated. Does that change right now?
No, I think, Alex, I agree with your view that this sector being one of the sector which will hurt the interests of common man more in US. And I think ultimately, in case there is an imposition of tariff, all the pharma companies will pass on that increased cost to the consumer over in the US, and that can lead to the further inflation on the healthcare cost in United States. So I think overall, I think it seems to be more of an insulated sector as compared to other sectors where shifting a manufacturing base is relatively easier. And at the same time, on other hand, when US is trying to reduce its dependence on China, I think you can't be plugging both the ends, where in China as well as India, you can put an import barrier, and that can hurt the healthcare industry in the US. So I think it seems to be a relatively insulated sector. Better wait for the clarity from the US, what exactly they are trying to do and which are the sectors they are trying to plug through tariff imposition.
All right. Thank you so much, Sunny and Akshay, for joining us on this leg of India Market Open. Markets have come off. Let's just pull up very quickly before we get to our first exclusive corporate conversation of the morning. Markets, okay, back up again 0.5%. So volatile kind of a day. Nifty back up about 0.5% after a dip that we saw there. I want to see if banking and IT are holding up. Banking also seeing that recovery. See that exact same chart pattern that you can track over there. IT has been solid now, about 1.5% up there. Broader indices, just very quickly, I want to see what the 250 and the mid cap are doing, small and mid cap are doing before we get to that conversation and track it there. Nifty mid cap has come off a bit, but holding on. Small cap 250 now in the red. So a bit of a volatile session. Remember, a lot of short covering on the monthly expiry week is fueling the markets as well. So keep a close watch on where those indices go. Meanwhile, it's day 2 of the